Welcome to Dividend Income. This is part 2 of high yield dividend stocks. You can view part 1 in my previous video. Let's have a look at Lumen Technologies, ticker symbol LUMN. Lumen Technologies is a US telecommunications company formerly known as CenturyLink. It has surprisingly been around since 1930. It offers communications, network services, security, cloud solutions, voice and managed services. It has global customers in North America, Latin America, European, Middle East and Africa and Asia Pacific. It has a yield of 9%, a current price of $11.23 and a quarterly dividend of 25 cents. The payout ratio is 39%, so it can easily cover the dividend payments. The ex-dividend is 26th of August and the next dividend payment is on the 16th of September. They have been paying dividends since 2012. Looking back through history, they have had a couple of dividend cuts, first in March 2013 and then in March 2019, but have sustained the 25% mark from then on. If we look at the financials, the stock has done nothing over the last 3 years. It has dropped 36.39% from its all-time high back in August 2018. Its 52-week high is $14.46 and 52-week low of $9.33. These levels go well beyond the 52-week period. Since mid-2019, it has hovered around between $10 and $15. I think it will stay in this area for a while, so at the current price of $11.03, it does not represent a risk, but you won't see any growth anytime soon. It has had a 6.3% decrease in sales year on year, which is worrying. On the other hand, it has generated $668 million in free cash flow in Q2, which exceeded the company's dividend payments of $260 million. The big issue for investors is the company's debt. As of March 2020, stands at $28.2 billion. It is down from $31.1 billion from the previous year, but that is still a lot. The sale of 2 of their businesses will help cut debt. Its local incumbent carrier operations and its Latin American business operations. The sale of these 2 could generate $7 billion. Lumen are looking at future growth. On the earnings call, they have a growth strategy in place to increase profit in its enterprise and mid-market segments, regroup the business unit and focus on growth products and services. This included promoting its services of network security, zero trust, UC and its fiber internet service, Quantum Fiber. They are investing more into their edge computing platform. Edge computing speeds up analysis and latency time involved in moving data back and forth. They are expanding the edge group computing solutions into Europe. I like that they are aggressively growing this part of the business. As per a report from Markets and Markets, the edge computing market size is expected to grow from $36.5 billion in 2021 to $87.3 billion by 2026 at a compound annual growth rate of 19%. On January this year, Lumen announced a network service contract worth more than $1.2 billion from the US Department of Agriculture. Contracts like this and the potential growth could be huge and could really help turn around the company finances. Lumen Technologies is a member of the S&P 500 index and the Fortune 500, so indexes can buy the stock. Let's have a look at the top 10 owners. There has been a lot of buying and selling, with an even split of bought and sold. The Vanguard Group and Northern Trust making the biggest purchases, adding over 2 million shares each, taking the Vanguard Group total to 114,713,136 shares, which brings in a quarterly dividend of 28,678,284 million. The high yield really comes into play here. There were some big sell-offs, especially from Temasek Holdings, PTE, but they still have a 7.3% stake in it. So what do the analysts think? The general market consensus is not to buy this stock. TipRank's analyst consensus is a moderate sell, no buy, 1 hold and 1 sell. 12-month targets is $11 high, $10.50 medium and $10 low. So based on the median, that is a 6.5% to the downside. Again, I talked about this earlier, it has been hovering between the $10 and $15 anyway. Market beat has a analyst rating as reduced, no buy ratings, 2 hold and 2 sell. They have a price target of $10.60, so very similar to Tip Rank's. For me, this is a stock I will continue watching. A bit of progression would be nice to build confidence. I want to see a positive turnaround in the next few quarters. If they had another couple of bad quarters, they could cut the dividend, which is something to be wary about. If they slow or turn around sales, I will start adding to my portfolio. Next up is Grindrod Shipping, ticker symbol GRIN. Grindrod Shipping Holdings Limited is an international shipping company, owns, charters in and operates a fleet of dry bulk carriers and tankers worldwide. The dividend yield has shot up to 13.1%, a current price of $21.01, and a new quarterly dividend of 84 cents. The ex-dividend is the 8th of August and the next dividend payment is on the 19th of September. Looking back at their dividend payments, there's not a lot of history at all. They have been paying dividends since only December 2021. Every company that pays a dividend had to start paying a dividend at some point. Who knows, in years to come this may be a dividend staple. Grindrod Shipping have been doing exceptionally well. The share price has just soared after the recent Q2 earnings report. Revenue growth of 47%, hitting $161.58 million. Earnings per share is also up to $2.74 from last year's 99 cents. So why have they been doing so well in the current global market? This is a comment from Stephen Griffiths, the interim Chief Executive Officer and Chief Financial Officer of Grindrod Shipping. The dry bulk market remained healthy in the second quarter of 2022, despite the ongoing Russia-Ukraine conflict and disruptions in the traditional trade routes. The small segments in which we operate are still earning a premium over the larger vessels due to their versatility, benefiting from a broader base of cargoes and continued spillover from the container trade. The supply picture remains at very healthy levels and continued minimal ordering of new vessels due to concerns over environmental regulations and higher new building prices. So what do the analysts think? Tip Ranks has a consensus as moderate buy. The average price target is $31.50 with a high forecast of 32 and a low forecast of 31. Market Beat has an analyst rating as buy, 3 buy ratings, 0 hold and 1 sell. A target price of $29.67 with 54% upside. So what's the verdict? They are a little more diverse than Global Ship Release, which I like. The lack of history is a bit off-putting. They are currently riding the wave of the global macroeconomic effects on the supply chain. We don't know how long this will go on for. It is a bit risky, but the yield and potential growth looks good. I may add a small holding to begin with and continue to monitor the progress. Thanks for watching. A quick disclaimer now. As always, you should do your own research when investing. I'm not a financial advisor, and these are my personal views. The purpose of this video is to give you additional information and hopefully help in making informed decisions. Thanks for watching. If you enjoyed the video, please like and subscribe.